Welcome to episode 2 of the Family Office Sherpa podcast. My name is Shaun Parkin, founder and managing director of Family Office Specialist Hall Road Investments. I'm Australian and based in sunny Perth. Some may know me as the Family Office Sherpa. I have a newsletter of the same name, which I send every 2 weeks and cover all things family office investments, technology and operations. In terms of client engagements, I specialise in investment governance, which means I'm often the boring one at the pool party, speaking around investment policy and strategy. I've been a stockbroker and asset manager, worked on a gold mine, and even spent some time in the deserts of Mongolia, trying not to freeze to death. Uniquely, I have also worked with the family office investors for over 12 years, assisting clients with assets ranging between $200 million to up to around $10 billion. I've helped them to structure, improve, start, sometimes dissuade from starting their own private investment office. This podcast is a series of 5 and aims to be a guide for families and their advisors looking for practical and implementable insights. I am not providing investment advice here, so please read the disclaimer in the show notes.
This is the Family Office Sherpa.
Welcome to episode 2, the investment policy statement. So we'll call it the IPS from now on because it just makes it a little bit easier. So what is an IPS? Put simply, it's a document used by family offices that lays out the strategy by which we will manage the family assets within this private investment office. I have seen a ton of these documents, some very short and precise, others long and full of jargon. And I'm going to make you guess which ones those are read and those that just sit on a shelf gathering dust. For this episode, I've decided to be very specific on what you can include in the IPS, as it's something a lot of family offices ask about. And this is rather than a broader discussion and getting down into real brass tacks here, actual detail, which I think could be beneficial. So if I was listening to this, I would want to write it down and include those in the investment policy statement. So that's what we're going to do. None are the same, but most follow some basic principles. Like I said, I've seen a lot of these. I've seen some institutional style ones and I've seen them almost on the back of an envelope. But really the idea is to have something that's relevant and is going to be used by those managing the assets and also engaged with the family office. Okay, so they usually comprise 6 main sections. 1, purpose. 2, investment governance. 3, investment philosophy. 4, investment objective. 5, investment strategy. And lastly, performance monitoring and reporting. So what are we talking about here? 1, purpose of the document, i.e. what it will lay out for the family. Number 2, the investment governance, specifically the structure of the investment committee and the counterparties and how we interact with those. 3, the investment philosophy, i.e. the beliefs and principles. And 4, the investment objective, what financial and non-financial goals we're looking to achieve. When I talk about number 5, which is investment strategy, we're talking asset allocation framework, asset class objectives and criteria, and investment restrictions. And as I said, number 6, performance monitoring and reporting is really the heart of the software. How we're reporting, how we're getting that information to the family members, but also importantly, those that are actually managing the assets. Right, let's dig into it. Number 1, the purpose. And when I talked about purpose at the beginning of last episode, this is slightly different. What we're talking about is the purpose of the actual investment policy. So what we're looking to cover. So as an example, something like, this is established for the aim of managing the accumulated financial assets of the family. Something as simple as that. Others say this document provides the link between the objectives of the family and the day-to-day management of the investment assets. Something that just gives an introduction to what this document is about. So if someone picked it up, they would say, I know what the purpose of this document is. As an example, there tends to be 4 main parts, right? So it details what the IPS will cover, specifically investment governance, investment philosophy, investment objectives, and investment strategy. So let's go through those. First is investment governance, what the investment committee is and how we're interacting with external advisors. So A, layout of the investment committee. In the investment committee, you have 2. You have the executive committee and then you have the broader investment committee. The executive committee is really what we call those that have the executive powers, like basically those that can make the decisions. All right, so we're going to invest in here, we're going to do this, we're going to do that. That is what I would call the executive committee. The investment committee, however, is slightly different. So who makes up this one, the investment committee? What are their roles? As an example, and what I've seen in some that I use with clients and I've seen from clients, which is to provide Regular reviews the investment strategy to help ensure the strategy is likely to meet the objectives set by the executive committee. It sounds silly, but really what we're trying to say is regular review of the investment strategy. So that's really what the purpose of the investment committee is. The other is to implement the investment strategy, including conducting due diligence on new investments and managers. Now, when we say that, we are doing due diligence from a governance perspective. We're not doing it from deep dive into the actual underlying portfolio managers and constituents. What we're doing is we're giving the agency of that to our counterparties or someone that's been tasked with being the investment manager. Sometimes it's the chief investment officer, sometimes it's the manager of managers, but really what we're doing as the investment committee is to implement that strategy. We're also responsible at the investment committee level for monitoring and reporting on the investment performance up to the executive and up to the family. So that's really what we're in charge of here. I've got to make it really clear. In my head, and some people don't agree, but this is my podcast, the investment committee does not have executive powers. The primary role is to establish the process and provide information so the executive can make decisions. It's a governance structure. Okay. Now, B, I mentioned it. Other parts of this area is the external asset consultants, advisors, and managers and how we interact with those. So the executive committee and the investment committee is supported by those, let's call them trusted consultants, advisors, and managers. We all know them. The role of this group may be to, and this is the role of our external suppliers, assist in the investment objectives, in setting the investment objectives, help set the strategic asset allocation. We rely on counterparties, especially large counterparties with deep analytics research, to be able to give us those strategic asset allocation weights and long-term capital market expectations. Identify good managers. We can rely on them to do the research, the DD, things like that, on good managers. The network effect of larger organisations. They provide due diligence on individual investment managers themselves and help to monitor ongoing performance. We're very good at offloading to our good big counterparties, things like yearly strategic reviews, some monitoring of the underlying constituents if we need some really specific data-heavy analytics. So we do use it counterparties for that as well. And we use them for regular reviews and to be able to advise on those that we probably don't have a skill set in. If there's those specific managers or those specific allocations that we don't, then we rely on those counterparties. So that's that part of it. So number 3, investment philosophy. This is really what the office believes. And it can be as simple as 1 line or 2 lines or a paragraph, or it can be 10 or 11 points. It really has to reflect what the beliefs are of the people that are responsible for these assets. So some examples. One that we see a lot is asset allocation is the major determinant of investment performance and risk. Some believe that picking single stocks and managers is it, and others believe that the divergence of these portfolios is really at the asset allocation level. I personally believe that as well. There's also people that believe that there's little benefit in high turnover. Some believe that there is benefit in high turnover. Long-term horizon is a 7 to 10 years, increasing the probability of meeting the objectives. We talk about long-term investors or patient capital. Sometimes that is a central belief here. Others, it's around indexing versus active management. Some believe that indexing is the best way to be. Some believe that active, and some people believe there's something in between. But this is the place to put that. Other things that we see a lot of in this space is that there is an illiquidity premium exists, in that if you have illiquidity, then you can get higher returns and it can be exploited. Others believe that it needs to manage for uncertainty and things around drawdowns and things like that. So there's your beliefs. You've got to keep those in there. So if you're writing them down, think about the way that you believe that these assets should be managed. Another way of looking at this is something like the guiding principles, as an example, what some people might call a North Star or something like that. Some things in those sorts of spaces that I've seen is that attractive real returns over the long term are the main objective, right? That could be 1 line. The group is unique and therefore asset allocations and benchmarks can be different to peers and institutions. I think that one comes up quite a lot, which is to say normal benchmarks don't apply to us to a certain degree. We've got to be customised and idiosyncratic. Due diligence either internal or through external specialists is a critical aspect of investment process. I love that one because it really does show, it does cascade down from the governance piece. And others believe that things like leverage should be minimal and needs to be managed diligently, right? So these are the guiding principles or the philosophy. Right, investment objective, or what the financial and non-financial goals you're looking to achieve here. An example of that is the initial investment objective is to achieve a total return, net of corporate tax or whatever expenses you're looking to do, of some total return benchmark, which could be CPI plus 4 or whatever that ends up being, right? So outperforming inflation over long periods of time, or it might be against cash or something like that at the aggregate level. You also can dig into specific asset class performance requirements within the portfolio. That's actually really good because then you can do it at the asset class level and you can look at your managers when you're benchmarking them appropriately if they're outperforming these investment goals. Something like cash and low risk liquid assets have a lower CPI benchmark, or they might be cash, like the central cash rate plus 2 or 3% or something like that, all the way up to things like equities and private markets, which you might be looking at, double-digit returns over that period. So you can do it at cash, direct property, diversified total return portfolio. We see in here we got property syndicates, mezzanine finance syndicates, and direct investments. If there's specific things that the family office invests in, some invest in things like retirement villages or things like that, then you still have to have some return expectations, some financial goals for each one of those asset classes. So that's where you put that. There's also might be some non-investment goals, and you can put them in here as well, which is one of the outcomes that you're looking for from this particular investment portfolio is education or engagement with family offices or with family members. It may have impact goals that are non-financial impact goals. It can't be measured the same way that you would, say, equities or fixed income. So this is where all these things go. So there's plenty to sort of choose from, but I think the most important thing is to make sure that if you're having an expectation of a goal, there is, especially financial goals, there is an element of making sure it's benchmarked and that there is a measurement component to it. So next, investment strategy. So basically what they're saying here is to achieve that investment objectives, how we're going to do it, right? So in here, this is where you set the asset allocation to meet the investment objectives. Like I said, we rely on counterparties and things like that for our asset allocation a lot of the time, or we might have internal asset allocation. It's usually born out of some form of long-term capital market expectations. What's the long-term expected return of equities? And therefore, that basically the implementation of that is where you're going to get that total return that we're looking for. Tactical asset allocation, which is difficult. Dynamic asset allocation, which is even more difficult. And what we're talking about there is more short-term bets. Dynamic tends to be potentially weeks, and tactical tends to be sometimes quarters and months. And determine the counterparties and structures for that implementation. How are we going to do that? If we've got an investment strategy, how are we going to get to those goals? What's the most effective way of doing it? Are we going to use our counterparties? And what does the structure of that implementation look like? What are we going to insource and what are we going to outsource, basically, in terms of implementation? Other components that you can put in here is things like asset class definition, so everyone knows what we're talking about. What rebalancing looks like in terms of things like timing or drift. What are the requirements for liquidity? If we have 1, 2 day, 3 day, 30 day, 90 day, quarter, year, 2 year liquidity requirements, this is what we put in here. And sometimes some people put in their currency policy, hedged, unhedged, things like that. This is also where you can detail things like the asset class purpose. Equities are in the portfolio for this reason. This is also where you put in your constraints and criteria for the assets outside of, say, the operating business and things like that. A good example, and one that most people understand, is public equities. So let's use that as an example here. The objective for public equities generally is to diversify away from direct property assets or assets that you have a high concentration in or that you have a bias towards. You tend to have a return expectation, whatever that return expectation looks like. It might be 7, 11% total return per annum or something like that. It's lower correlated to illiquid assets, fixed income and cash. Things like it's got daily pricing. It's tax effective, in particular in countries that have tax efficiencies when it comes to holding public equities. You also put in here things like constraints and criteria. Some examples being no single stock exposure above a percent. You also put in constraints and criteria such as we go for active or we go for indexing, as mentioned. Sometimes that can be specific to the sub-asset class. Like broad market public equities, we might go indexing, but small caps or nano caps, we might use active, things like that. This is where you put all that sort of information. We also talk about investment restrictions. So some examples being no more than 15% in any one fund manager or investment mandate, no more than 25% exposed to any fund manager or organisation, no more than 20% across particular sub-asset classes or asset classes, things like that. That's where you put all this sort of detail. So there's plenty to go in, but if you're writing all this down again, this is really where you put it. Now, that's probably a lot of information, but the last one is performance monitoring and reporting, which is, you probably guessed, is probably one of my favourites. So in here, what we're putting is, as mentioned, the goals that we're looking for, this is where we're reporting on it. And it has to be accurate. It has to be within a cadence that is reflected in the way that you meet at the family office level. If you meet quarterly, make sure the performance reporting is accurate for that quarter. If you meet monthly, again, make sure it's accurate, make sure the data is easy to get hold of, make sure that people understand it, make sure it's engaging, make sure you don't plonk a 75-page document on someone's desk and go, that's how we're going. Reporting is around engagement and making sure it's relevant. So do it at the asset class level, do it at the counterparty level in particular if you're looking at external but internal as well, which is to say how are they doing relative to, say, broad market benchmarks and things like that. I mentioned that benchmarks are really specific to the family. Keep them really specific, but still include them and govern both the internal team and the external team by those same benchmarks. And you also have separate performance metrics for the executive and investment committee because they look at different things, right? So, and family members might look at different things. One of the things we're starting to see from a technology perspective is an ability to customize this reporting. If you can, please do that. Keep it relatively high level, but really the aim is to make sure it's doing its job. So that's it. That's the investment policy and governance structure. I hope that was interesting. I know I find this probably the most important part of setting up the investment office. So if you've got any questions, feel free to reach out. And I hope you enjoyed it. Thank you.